So today we'll be going over just in general what stocks, options, and futures are, and then how we go about trading those futures. Here are the financial institutions. Stocks are basically just a representation of a share of ownership of a company. What does that really mean? It's basically an IOU. You pay something and then you have an IOU on paper that says you own a percentage of a company, which you can then just trade back and forth, depending on what price is currently at. And if you were to buy it at a low price and then sell it at a high and keep repeating it, then you'd keep making money. And options is basically just a contract that bundles 100 of those stocks. So it's the same as buying 100 of those stocks, but without having to put upfront all the money required for it. So, for example, Tesla's at $293 per stock, which would cost you about 29,000 if you were to buy 100 of them. Or you can just buy an options contract that costs $1,000. A futures is also a contract but for one stock, a future price, and it's leveraged at a certain amount. So let's say if Tesla moved up from 293 to 294 and you had one stock of Tesla, then you'd gain $1. And then if you had an options contract, that options contract would move up by $100. But if you held a futures contract, it would move up by about 20. The difference is in their upfront cost. Buying 100 Teslas would cost you 29,000, or if you buy one options contract, it would cost you 1,000. But if you buy a futures, it costs you nothing except for little fees that are about $1. You pay the difference in the price. If Tesla moves up by one, then you earn $20. If Tesla moves up by or moves down by one, then you owe $20. So, what are prop firms then? Well, remember that if your futures were to move against you or move down, you'd owe money. So basically, prop firms give you money to trade futures. So they're risking their money and you don't have to risk yours. So let's say on average, Tesla moves about 20 points in one day. If it moved against you 20 points, and then at the end of the day, you would owe $400. If it were to move with you or in your favor, then you would gain $400. And if you were to trade with a prop firm, you'd keep 90% of that, and then they get the 10%. So they do this because then if they can find good traders, then passively they'll just keep making money off of that 10%. But how do you get them to give you money? Well, they have two steps. They have two tests that you have to pass. One is called an evaluation account, which is a paper account that you can use to trade the live market, so market while it's open, but with fake money. And then a funded account. So if you pass your evaluation account, you get a funded account, which is also a paper account, but this time you can actually withdraw money. So they'll pay you, but they don't really make any money on it. So if you do it consistently, if you are consistently profitable, they'll move you to a live account. The live account is their money. So we'll look at TopStep. TopStep is one of these prop firms. There are many prop firms. TopStep is the first and very reputable, and they have been known to be very consistent and dedicated to helping their traders learn and grow. So the evaluation costs an initial amount. So usually $50, and then they give you a goal, profit goal to hit, and then a loss limit. If you reach the goal, then you pass. If you hit the loss limit, then you lose the account. So you just lose the $50 as fake money. If you hit the goal, then they'll offer you an opportunity to activate your funded account. This activation fee usually runs about $150. In this account, if you were to reach your goal, you can withdraw real money and they'll pay you. And if you lose it, then you just lose the 150. If you are consistent and you perform well with your funded account, they will move you to a live account. Then if you lose that, then you lose, then you pay nothing. Let's go over to the TopStep account right here. You can see here, if you hit start a trading combine, you can see there should be three options here. Just give it a second. There you go. You have a 50K, 100K, and 150K. The target for each one goes up. So let's say the 50K costs $50. You have to reach a target of 3,000. However, they do have a consistency rule, so they don't want you to make 3,000 in one day. The consistency rule is 50%. So you want to aim for 1,500, 2 days. Max amount of contracts you can enter at a time is 5. Once you exit, you can enter another 5. It's not max total. If you hit 2,000, if you go negative 2,000, then you just lose the account and you can start over. But you just hit select here, and then you choose a platform. Platform is just where your chart is, where you can actually perform your trade. Just click on Top Step X, which is their platform. We'll go over that. Then you just hit next, and then you just hit acknowledge and pay, and then you just log in. You go over to then to topstepx.com, just type it in. You get this chart. You select that account that you just purchased, and then you can enter your trade, buy and sell high and buy low. And as you reach your target, you pass. And that's simply it. Go over to the master class to see how to use the charts and how to enter and exit trades.